Now, from the ongoing Ghanaian government and IMF regional conference in Accra, Ghana, we caught up with the Ghanaian Finance Minister, Seth Terkper, and of course on his team, and we got an interview with Seth Terkper, Ghana's Minister of Finance, Seth Terkper, on the economy's fiscal and deficit issues in the economy and some of the key subjects tabled at the conference. Take a look.
We have the fiscal issues. It's where the issue of deficit comes in, which is, revenue against expenditure and the pressures of the wage bill, which is resulting in the deficits. There is a program for resolving that, as we are now, which involves the fiscal consolidation measures, tax and expenditure measures. Then we do have the financial integration, which is the subject of this workshop, and that actually has to do with the extent to which financial institutions within the sub-region do coordinate their efforts, but also integrate some of their processes, so that they can improve the welfare of the countries that they serve. And when we talk about financial institutions, we're talking about the central banks and the commercial banks. So you can see that, we have central bank governors and we do have commercial bank officials here. Then we're also looking at the capital markets, where there's another linkage with the fiscal. And the session is also discussion. There's a third session that is discussing the extent to which Africa or West Africa can get long-term financing for infrastructure, development. So this is the scope of the workshop. On the financial, let me put both the financial and the fiscal. We do have ECOWAS already, and within ECOWAS, we have actually protocols like the West African Monetary Zone, which calls for this type of cooperation already. And as the presentations have indicated, as Africa emerges and as Africa grows, there's a lot of attraction also about Africa, and therefore there's a lot of financial flows, as was indicated, between 10 to 12 billion, dollars of capital flows have come in from financial institutions, the private sector, into the sub-region. And these are quite, large sums of money by, West African standards. So that is what, the discussion, here is about.
But with the challenges that we are having as an economy with finances, how would this benefit us? What long way would it go to improve our finances as a nation?
Well, if you are talking about a link between finances and the government's budget, basically, for that, because, first of all, recently we've had gold and cocoa prices, for example, going down, and it affects the current accounts, it affects the reserves, it affects revenue, and it affects the value of the currency. So that's one effect. If you have good financial integration, you could have financial transactions being done in a more transparent and more effective manner, and it will help resolve some of the problems which businesses have, for financing, say, exports. That way, they grow the economy, they grow through growing their businesses, and, the economy benefits from additional taxation, which is one way of looking at the whole issue of resolving, the issue of deficits. But the essence of the workshop is actually about how, financial transactions are done within the sub-region. The example that was given is a number of Nigerian banks coming to Ghana to operate as subsidiaries. When they come to Ghana, to Gambia, to Sierra Leone to operate, they operate as subsidiaries, which means that their parent companies still remain in Nigeria. Some of the financing is from Nigeria to set them up. When they do business here, profits flow back. There will be businessmen who do work between Nigeria and Ghana, who may use these banks to do their financing. So the issue of banking supervision to make sure that the banks are strong, and the issue of flow of, capital to do business, and what form of, lending. For example, so if a company goes to a Nigerian bank in Ghana, say Zenith, or some other bank to borrow, immediately it has an impact, on the operations in Ghana. But if that transaction becomes successful, there's a relationship in terms of dividend transfers and others between Ghana and Nigeria. So the central bank, so where banking used to be just national, Bank of Ghana looking at how business is done in Ghana, and the Central Bank of Nigeria looking at how business is done in Nigeria. Obviously, with banks doing business across, the West Africa frontier, then the governments will have to, come together, and in terms of their banking supervision, making sure that the ratios and other things, But the banks also working across, frontiers are also able to provide more capital for growth, and the region benefits. They can even finance projects, that overlap between, and they can do syndication to finance bigger and larger projects. So that is the positive aspect, which was being, discussed at the. Ghana is already a major beneficiary of that. We used to have 5 major banks. As we speak, we have about 26 and 27. And as was explained, out of these, about 10 are Nigerian banks. So we have already benefited from this type of, integration and movement of capital through banks, Nigerian banks. Obviously, Nigeria is a larger economy. They have, because of the oil and gas, resources, they have larger banks, and by coming to Ghana, they have also made more capital available to business. They have brought more competition into the system. But then the central bank governor would have to make sure that if he says a parent bank is strong in Nigeria, it will not be undermined by a subsidiary bank in Ghana which is not being run well, and vice versa. We may have a subsidiary that is doing well in Ghana, but which may not be doing so well in Nigeria. In the end, their accounts are consolidated, as we say. So it is important that when they do their banking supervision, they coordinate, exchange information, and there are protocols, financial protocols, and so that is an aspect of the. So the positive can also come up with some risks, and that's why there were discussions about risk. The risk of overextending yourself beyond your borders, the strength. But by the central bank supervision departments, coordinating with each other, so the workshop is looking at one, how financial transactions are flowing, to how financial institutions are operating across the borders, and 3, how these are, interact to likely pose risks for the host country as well as the country from which, the borrowing is coming from.
But really, how do we intend to minimize the risks involved?
That's the coordination. You can't, the only way to do it. Yes, that's basically through the exchange of information, so that the banking supervision here, department of the Bank of Ghana here, establishes links with the banking supervision of the Central Bank of, Nigeria, so that they are able, to exchange information about, But then there was also mention, for example, about a college of supervisors, where the banking supervision staff for both come together to do joint supervision of banks that operate across, the frontiers.